Today we're going to be doing our part 2 of paper 2 for the SAICA IAC January 2025 exam. This will help you to prepare yourself for the upcoming supplementary exam that is taking place in June. So how we're going to go about this solution or the suggested solution, we'll first read the required, then we'll go back to the scenario just to summarize and recall what information we were provided in the scenario. Then we'll go back and look at the suggested solution again. So that will help you to freshen up your mind in terms of the information that we're provided regarding the reward program the company has established during December 2024. We need to prepare the correcting journal entries to account for the sales made by the selected FKP store via GoFresh. That information is on section 2 during December 2024 in French Cards FY 2024 financial statements. We need to ignore all forms of taxation. Date and journal narrations are not required. We need to make assumption that our amounts are material and all amounts must be rounded to the nearest rate. So what does this mean to us? We are told that the calculation we are making, it's only for the sales that was made through the app. If someone is part of the reward program and they made the purchase in store, we do not have to consider that. So we're only looking for the purchases that was done through GoFresh. So whatever you would have made calculation for both the sales that were made to reward members on in-store as well as online. So that way you could potentially make an error when you are working on this. And then what other errors you would make, and that will waste your time. It will be you calculating the taxation. It's either normal tax or VAT. That is not required if you decide to go ahead and provide any information pertaining to taxation. You will be wasting your time that is very valuable in the exam. The dates and narration you normally provide, but in this case, you are not required to provide the dates and the narration. If you do, you'll be wasting your valuable time. And then you are urged to make an assumption that all amounts are material. So what does that mean to you if they're saying make an assumption that all amounts are material? Even if you get a very small amount to your calculation, you are to provide the solution or the journal for that amount because it is assumed that it is material. And then the last part is that your amount must be rounded to the nearest rand. That means if you got an amount after decimal, you have to add in your full amount. That is why they're saying round off to the nearest rand. So before we then go and look at the suggested solution together, I've stated we're just going to go to the scenario on the section that particularly addressed the reward program. We're going to summarize it together. Then once we are done, we'll then go back and look at the suggested solution. Then let us look at the section that was addressing the French Rewards Customer Loyalty Program. It is 2.3 of our paper 2 of the SAICA IAC January 2025. What is important here is that this reward program will only available to FKP stores, and then they are effective from 1 December 2024. That means this reward program was only available for 1 month for the year ended 31 December 2024. The name of the reward program, it's French Reward. And why did the company decided to go ahead and have this program? It's to increase the purchases and encourage the repeat visit. We all know that If Discam didn't have reward program, everyone will go to clicks just to ensure that they get to the reward program, which will reduce their future purchases. So the reward program are mainly created to increase or boost sales and encourage the repeat buyers. And why are we even doing this program? It's because our sales performance in South Africa has declined significantly. It is for that reason that we have this program. So there's nothing important I want us to look at in this paragraph. So we then move to paragraph number 3. Paragraph number 3, it says you earn 1 point for every 2 rand spent, while 100 points earns customer a discount of 1 rand. So what does that mean? It means if you spend 2 rand, you're going to get 1 point. However, in order to get value in rand for your reward, you need to have 100 points and then you get 1 rand. Who earns? So it can only be earned on purchases in store and via French Go Fresh. So what does that mean? It means this program is only available for if you make purchase in store or online, but it's not available for delivery or if you are redeeming. So now which part is important for us? It's for Go Fresh, because the correction we are making, it's particularly for the purchase made online. So any rewards they earned on the in-store purchase, it is not of our concern for the purpose of addressing the solution for today. So do you see why it is important for you to understand the required and digest it? Because it helps you to understand what exactly you need to focus on as you read. Then we're going to go down. So during December, that is when this reward program became effective. A cash amount, including delivery of 5 million, was made via GoFresh. And then they continue to tell us about the in-store. But we are not interested about any matters that relate to in-store, because we are not going to be addressing the matters relating to in-store purchase. But the correction that we are making, it will regard to purchase made via GoFresh. Then they were told that the fixed delivery fee is 35 rand. Why do you need that information? Because you are told the amount is sitting here. Therefore, you need to exclude this delivery fee on this 5 million. So you need to know how much is the delivery fee in order to be able to make it an exclusion or to allocate the amount for delivery fee, which does not attract the reward. How do you know that delivery doesn't attract reward? Because you were told in paragraph 3 that you're not going to get any point for delivery. Then to calculate, you need to exclude delivery. 20% of the 10,000 orders made during December 2024 were via GoFresh. Purchase with the French reward cards and earned a French reward. One order requires 1 delivery. So meaning to say that if you make an order, then it's 1 delivery. So they're giving us this assumption upfront to make our calculation less complex, because they could say that 1 order, 5 deliveries, and that mean it will complicate splitting of this 10,000. So SAICA in this time, they were very lenient to say, no, just understand that for 1 order, then this is what it means you're going to get 1 delivery. Then they correctly estimated that 75% of this French reward program will be redeemed. And then by 31 December 2024, 250,000 French rewards earned during December 2024 were redeemed. And then the customer, they only paid 100,000 cash for those purchases. So that's basically giving us the details for the redemption. Then if you move down, it then tells us the details about the performance obligation. So they're telling us if it's a non-French reward customer, there are 2 performance obligations. The first one being the sales of good, And then this one, it's the delivery. However, if the customer is a member of French rewards program, that means there is an additional performance obligation, being the French reward. Because we need to deliver points to that customer, which can be redeemed to a reduced purchase amount in future. So if you look at this question, you can just see this is IFRS 15 question. Because now we're talking about allocation of revenue, performance obligation. So you can see you need now to bring in your IFRS 16 hat, because it is now important for you to have that IFRS 15 hat in you for this paper. French cards is uncertain how the French reward program revenue should be recognized or journalized. So what they did, they have provided the journals. However, in their journal, you can see they have not provided the amounts allocated to the reward program. The journal is as below, which has the bank of 5 million, because we are looking at GoFresh revenue, which we have told already that is 5 million. The revenue for delivery, we know it's 10,000 order times 35 per order, which gives us 350,000. And then the sales of good, it is 5 million minus 350, which is this one minus this one. And then there is bank and revenue sales of 100. So it's this amount that we told that was paid by the reward program members. So now that we have looked at all the information we have in the scenario again, then we need to go and see the suggested solution. So our suggested solution has the journal, the note, and the calculation. So what I want us to do, I want us to look at what we have in the calculation, then we can move up and look at the correcting journal. So now for the calculations, C1, they're calculating the stand-alone selling price. Why are they doing that? Because they need to have the stand-alone selling price for goods, for delivery, and for the redemption of points. Now, let us see what happens. They're saying they have a total sales. Total sales were given at 5 million. You can see just by bringing in the 5 million, you already have 1 mark. Just to bring in the 5 million, you have 1 mark. So guys, Lennon, because all the information you're getting from the scenario, it's not going to come from air, but the information you got from the scenario, you're going to get 1 mark. And then online sales to French reward members, we're told is 20%. Then we're going to take this 5 million and multiply by 20, because we're only going to allocate to the members. Then you have 1 million. We need to reduce the delivery fee. Why? Because the delivery fee does not earn points. Then you're going to get the 10,000, which is the total delivery or orders. You multiply by 20%, then you times by 35 rand, which is the figure we were provided for the delivery on the scenario we just read. Then it gives us 730. After we've excluded the delivery, how much do we have now? What we have now, it's 930. Now that you have 930, you need to determine the number of points these people have earned. So to get that, we know that 1 point for all 2 rand spends. Then how are we going to get the points? You're going to take this amount and divide by 2. Then what do we get? We get 465,000 points. Because we said 930 divided by 2. Because we are told 1 point and 2 rand. 2 rand, 1 point, if you spend 2 rand, you get 1 point. So that is why we have the 2 rand. This 2 as a denominator. It then gives us 465,000 points. This is points. It's not the rent that we owe them. It's just point. And now we need to consider the likelihood. Consideration of the likelihood of redemption, that is as per IFRS 15 point B42. Now we know that we're owing them this much, but we need to be probable based on, we create assumption, Guti, of this 465,000 points, how many points do we think will be redeemed? So now, it either here we've introduced actuaries, or the CAs that are working in business will have to look at the estimation and provide basis how they arrive at 75%. And that 75% is what is going to be used. Now we take this 465,000, we multiply it by 75%, which is the probability of redemption, and we're saying the points will actually be 842,750 points. Now, the points that we think are most likely, or we're gonna get with higher probability, is 448,750 that we're gonna redeem back to the customer. So now that we have the actual number that we think we'll need to redeem, we have to arrive at the value or the amount. Now, how do we get to that amount? In the scenario, they told us that you need 100 points to get 1 rand discount. Now we're going to have to take 348, 750 points and divide by 100, and it gives us the value. And the value is, well, how much? 3,488. Do you get how it works? Just to take you through the steps, you need to know what is the total sales, and of that total sales, members, they contribute what percentage, and you multiply by that percentage, then you get the amount of revenue derived from the members. Once you've received that, you ask yourself, what is excluded from receiving the points? It is delivery. Then you have to exclude delivery. How do you exclude delivery? You're going to say the total number of deliveries that were made times 20%, because it's the 20% that was made in December, then times 35 Rand, which is 35 Rand for delivery fee, that reduce our sales by 70,000, which we cannot allocate rewards for. Then you have 930. Once you have 930, you ask yourself how the points are earned. We are told that 2 Rand spends give you 1 point. Then you have to divide 930 to get 465, 5,000. Then you have that, but now you wait back and say, no, IFRS 15.B42 says I needed to work on the likelihood of redemption. Then we are told that the likelihood is 75. Then you take 465, 5,000, you multiply by 75. Then you get 348,750. Then once you have the points that are probable to be redeemed, you have to ask yourself, then how do I get 1 Rand? I need 100 points. Then I'm going to take that and divide by 1,000. Then it gives me the amount of 3,488. Now I have the standalone selling price. What do I do now? What's the next revenue for IFRS 15 step that I need to do? I need now to allocate. Then how do I make an allocation? Now I'm going to say, actually, by the way, in this 1 million, I need to add this amount for the points, because actually the sales should include this amount for the points. Now, what we're going to do, we're going to say, we already know that the sales of good, it's 930, right? And then we already know that the other thing that you're aware of, it's delivery, it's 70. And then we already know that this amount for points is 3,488. That means the standalone selling price, it's the combination of all of this. But we're not going to receive this amount. Since we're not going to receive this amount for the standalone selling price, we need to allocate what we're going to receive. And what are we going to receive? We are going to receive 1 million. Then we're going to allocate 1 million. And how we allocate it, we change our denominator to be the standalone selling price. And then we take the amounts per the standalone selling price divided by the denominator to get the amount. So how we get it? Now we're saying for calculation, it's this 930, which is the standalone selling price for the sale of good. We divide by the total standalone selling price, and then we multiply by what we're going to get. Now we're going to see now what is the allocated standalone selling price. It's 926,763. It's now less than the initial one, or the initial standalone selling price that we have, because we have to filter in this amount for points, and we need to filter in this 1 million we're going to get. Can you see how we work out the allocation? We are saying, what is the standalone selling price? The standalone selling price we calculated for material right, it became 3488. We know those two already. From the top, we bring it here, and then the total is all of it. But we're not going to get this amount. So how much are we going to get? We're going to get 1 million rand. Now we know that we're going to get 1 million rand. How do we allocate that 1 million rand to all this performance obligation? We allocate that by saying 930, which is this amount, divided by the total standalone selling price, and then you multiply by 100, which is the amount you're going to get. So pretty much this is the total standalone selling price, but you're not getting this amount. You're getting this amount. That is why you have to multiply by the amount you're going to get. Then now those are the revised allocated standalone selling price, because this is how it should look like in our books. Then C3, French word redemption. So now we are told that the actual at 250 points. That is coming from the scenario we have just read. We're told that 250 points were earned, but we need to work on estimate. The estimate at 248,750 points, which coming from here on top. We already calculated on top. Allocated standalone selling price, it's this one. Then you're going to say the allocated standalone selling price times 250 divided by 348,750. Then you get what we should, or we expect to pay over to the client. Then C4, you're going to say 930 minus 926,763. We get the amount of 3,233, right? Then you get here, you said 7,000 less 69,735, then you get 243. So why do we have those amounts? Because you need to understand why they have this amount. It's because we have to make correction. They have already made a journal, but the journal was not right. For that reason, we have to determine what they processed less what they should have, what they processed less what they should have, then this is the difference. And this they didn't take into account. Now we need to bring it in. Now we go and look at our journals. It's now the time to look at our journals. Then we're going to reduce the revenue for the sales of good because it is incorrect since they did not follow the principles of IFRS 15. Where are we getting this amount? It's coming from here. Then we bring it in, we're reducing the revenue by 3,233. Then the delivery fee needs to be reduced by 243. Where are we getting 243? We are getting it from here, which is what was processed minus what should be processed. It is minus this. They processed this, but they should have processed this. Why did they process this? Because they didn't follow revenue model steps per IFRS 15, or they didn't consider the reward program. That is why we are assisting here, because they've told us they were not certain about how they're going to go about the reward program. That is why now we have to do this correction. This was never processed at all. Now what we do, now we said contract liability, French reward. How much? We're increasing the liability by 3,436. And then what is redeemed? Contract liability, French reward, there's a redemption of 249, and then we increase the revenue by 2,492. Then we have note 1, award 1 mark if journal is balanced to the contract liability account, and then 2 can be combined with top line revenue sales of goods. This take us to the end of Part E. So Part E generally was more of IFRS 15 question. You just needed to understand the 5-step revenue model. Not even all the steps, you just needed to know how the part which talks about allocation of transaction as well as the standalone selling price. So that was basically IFRS 15. If you know IFRS 15, we should have been expected by the time you go to the exam, you would have done well on this question. So let's take us to the end of our part E, and then I will do the next part on the separate video. We'll follow the same method and then conclude. Thank you so much for listening up until this far. Really appreciated to have you, even though I don't know who's listening, but I do appreciate. And then what I'd like you to do is that you follow my YouTube channel. It's called Economics 199. Economics 199. And then also, can you please follow here so that you'll have all my videos as I post every now and then. Thank you so much.